All right, ladies and gentlemen, thank you for tuning in to the second episode of the John Guild Podcast Show. Really excited for today's episode. We have Alexander Stoyanov and Naser Ahmed, my very good friends and business partners. Alex is the managing partner and founder of Goldbay Advisors. And here we have Naser Ahmed on my right, this handsome gentleman right here next to me.
Thank you.
With Yafa Construction and Development. So first off, let me go ahead and thank our sponsors today. We have Element Studios here with us, who is actually recording the podcast. That is EL3MENT Studios.com for any media production. Please go ahead and visit these guys. They do great productions. So without further ado, let's get the show on the road, guys.
All right.
I'm really excited for you guys to finally be here. We all go way back.
Definitely.
So I'm actually going to start with, let's see here, eeny, meeny, miny, Naser. Let's go with
Why
Naser.
not, man? Thank you for having us.
Yeah. So Naser, you and I go way back.
Definitely.
I mean, we're not only great friends, you're also my neighbor.
Yeah.
Saguenash guys.
Saguenash guys, definitely.
All right.
Man.
Well, look, why don't you tell the audience what is it that you do right now? And let's start with that.
Well, first of all, thanks for having us. And we hope the best for you on this venture, man. So
thank you.
We're here to support and talk about real estate, I guess, and all the good stuff that's coming up in our future, right?
Absolutely.
So right now we're doing development and acquisition of larger properties.
So when I met you back in the day, why don't we go on to the original starting point of this entire development? Because right now you're doing some amazing developments and projects, and I feel that I saw literally the essence of when you began.
Yeah.
So you got involved back in what year? 2009?
Yeah,
2009,
I think is when we started. Definitely 2009. So what the Great Recession,
brought you into
right?
it? Yeah, the Great Recession.
Yeah,
but what got you into it? Like, what was it? You said something very interesting early.
So it was, of course, we met right in front of my mom's house, and I was a mechanic then, right, working for Volkswagen, and coming home one night, seeing you, right?
Yeah.
And I was like, what are you up to these days? And you're like, I'm doing real estate. And I was like, awesome, man. I got a few questions for you. And went from there, right?
I remember that. We talked probably for hours just about real estate. And you're like, I think this is a good time. And I was like,
I had $30,000 in the bank
account.
account. And I guess that was the right time to invest, right?
Absolutely.
So that's where it all took off. But what really made sense to me about real estate then was my brother purchased a 6-unit in 2006 for $750K.
Wow.
And then, after talking to you, I start looking into properties and just start running numbers, right? So I was like, he bought it for $750K, and he's getting this dollar amount for rent, and then seeing what was coming in the market then, right?
Yeah.
With the foreclosures, rent was still the same, but it was just a price reduction of like 60, 70, 80% or whatever it was. So numbers made sense. I was always a number guy, so it just made sense, and then it went from there.
Yeah, you've always been a numbers guy, and in addition to the real estate, you've also got different business ventures.
Yeah.
I've seen you as always an entrepreneur.
Yeah.
You've got gas stations, different shops.
Yeah.
And one very important thing, too, I forgot, you're also as I call it, a youth mentor. I mean, you've got that boxing facility as well. That's pretty exciting.
Yeah, that's very exciting. We started that in 2017, so it's a great thing. It's for the youth, and it's just something that my brother always wanted. And having a professional boxer in the family, we thought, hey, this is going to help the community that we've had our retail business in, and we had a place for our nephew to train in.
Yeah,
so awesome. It all worked out. It's a not-for-profit, and it's going. We started in 2017, and we started construction, mid 2017, and things are going great, man. Kids are in there. Program is rolling.
Yeah.
It's in the Austin neighborhood on the west side of Chicago, and there's just so much things going on right now. So
there you go. Well, congratulations.
Yeah, you got to give back, man. Definitely.
Absolutely.
If you want, you got to give.
You got to give back. Exactly. So we're going to go back into some of your challenges and some of the obstacles that you've had
Yeah.
along the way in the real estate, because we know that it's a bumpy road,
Definitely.
and there's always just there's a lot of crazy horror stories that happen in this
Oh, yeah.
in this
Oh, yeah.
business.
Oh, yeah.
But I want to jump quickly to Alexander Stoyanov.
The man.
Yeah, the man. Yeah.
The
So
man.
he and I studied together at UIC as well. We were in the real estate finance class together, and we were also involved in the UIC Investment Society. So, Alex, why don't you go ahead and share a little bit about your background, where you're from, and kind of what got you involved into real estate?
Sure. First of all, thanks for having me, Johnny. I appreciate the invite and I love what you're doing and I wish you great success, man. What got me into real estate, first and foremost, I'm a finance guy. Pursued my undergraduate degree in UIC. That's where me and Johnny met. From there, I pursued my master's in financial engineering. While I was doing that, I was doing a real estate internship, got my real estate license there, and I really got sparked up behind the interest of the tangibility of an asset, having it produce cash flow, and being able to master that asset class while at the same time pursuing the stock market, understanding how to analyze things with respect to equities, derivatives, currencies, and really mastering both sides of the world of the paper assets and the real estate tangible asset class.
That's awesome. At what point in time, I can't recall, when was it that you officially ended up getting into real estate? I know that you were trading, you've been doing the trading. So when did you go ahead and say, I think it's time to just start in this space?
So while I was at UIC, while we did our internships together, subsequent to that, I got really interested into real estate, and other good friend of ours, AJ, who actually made me kind of go and get my license. I got started with his company, and I believe that was around 2009 where I first kind of got into real estate, got my license, and I was doing it part-time in 2010, 11, 12. And then I eventually, after the IIT program, I kind of began full-time brokering.
Perfect. And on the first podcast, I go a little bit into detail about, we've really had some successes and some wins as when the brokerage started.
Sure.
1,000 units in the first year of brokering.
Sure.
That's something that not a lot of different companies can
Sure.
say that they've done. So, what do you recommend for people wanting to get involved in real estate or in the commercial side? What are some of the challenges that you've seen as a broker in dealing with some of these large scale businesses? Because we're talking, you brokered 908 units. That's a very large deal. And I think that was one of the largest non-portfolio transactions in the state of Illinois.
Sure.
That's something very that you should be proud of.
I'm absolutely proud of. Thank you for bringing that up. Goldbay is a company where we specialize in large multifamily properties and sales. We service our client to the best of our abilities, and we were able to bring a lot of value with respect to our client, who was a family office based out of New York, and we were able to put that deal together. As far as challenges, Johnny, it really boils down to experience, really having background into the business. You have to have a lot of skills with respect to numbers, math. You have to know contractual law. You have to know the different steps of the sequential process of the transaction. And the challenges are there. I think for anybody getting into the business, I think it's very important for them to grasp the fundamentals of the brokering business and kind of build upon the platform from there and kind of grow from there.
Yeah.
I don't recommend anybody get into the business and jumping straight into commercial.
Because you hear that a lot. I mean, there's a lot of guys that are like, "Oh, I'm going to go straight into commercial." I hear that's where the money's at.
Right.
Let's. But I mean, really, there's money in both residential and commercial, isn't there?
Sure, absolutely. It's every niche has a lot of opportunities to be explored, but overall, you have to start from residential, learn the fundamentals of contractual law, negotiation, representing a buyer, representing a seller, and kind of building on that platform.
That's awesome. That's awesome. Yeah, definitely great advice. And Naser, right now, let's talk a little bit about what you're working on, because you've got an amazing project in the neighborhood of Mayfair.
Yeah.
And guys, I'm telling you, it's crazy. I mean, from going to
condominiums, single family,
two flats, you've done so, like, it's just nuts. Like, to see you now where you're doing this amazing project. The alderman was there doing the inauguration.
Yeah.
Let's talk about all of that, because that
definitely.
to me, I was at the inauguration, and I'm going to tell you, Alex, we were all there.
Yeah.
And it was like, I got goosebumps, because I said, man, I have seen the growth. I've seen, like,
we talked about it when we were younger, and when we first started that one day we're going to develop and
do you remember
and move on to a larger scale. You know what? I think our dedication and our work that we put in just every day, that's what brought us here, and it's a blessing. So we're thankful.
So explain what is going on in that project. How many units are we talking about? Is it a mixed use development?
So this is my first development, ground up.
Okay.
Residential mixed use, and it's going to be 24 units, luxury apartments, and about just under 10,000 in retail. It's going to have indoor parking, and it's going to be a luxury. It's going to be nice.
It's beautiful. I mean, every time I'm on Lawrence Avenue, I drive by, and I'm just like, or if I'm with the family, I say, hey, I know the guy I know the group building that.
Hey, man, Goldbay's on
we're on the side there too. Yeah, we're on the side there for any leasing, right, Alex?
You know how it goes, man. We're all family here, so it's not just business. It's more, we all grow together and
Absolutely.
kind of, take this and run with it, kind of, you know what I mean? And learn from it. And me and my partners were discussing, partners on this project, discussing, like, what can go wrong,
right,
and what can go good. You know what I mean? I mean, we don't know which way it's going to go. So far, we had a lot of things just
headaches.
A lot of headaches, a lot of left field things just came out of nowhere and just hit us. But again, we knew what we were coming.
Let's hear those headaches, because that's what I want to hear. I mean, look, we got to get down and dirty. We got to hear the real story, the real shit.
So
this is this is.
So the Manasars, they're great friends of mine, and I brought them in on a deal. So it was that Wrigleyville deal on Clark Street, right?
Yeah.
So we were in the auction. We got outbidded, right? So that was my deal. I brought him in, and I'm like, guys, let's go. It's going to be cash. We got to do this. I need a couple of partners. And it was around $1.8 million, right? So I didn't have all the cash then. Mm-hmm. So, I was like, I need partners. Let's go for it. We lost the bid on that one. Then a week later, he calls me. He's like, hey, listen, I got a deal for you. It's on Lawrence. It's in the area where we grew up in Northside Chicago, Mayfair. And he's like, it's land right now, but we can develop on this in the future, and that's the plan. Is let's put something up in our area,
Yeah.
So I was like,
you can drive by.
Yeah,
kids in
definitely.
Here, and now seeing something that
So that's how it really happened. So he came up with the deal, and he was like, the guys that were there, it was a wholesale that lost it for around 1.6 million, and the bank just wanted to, clean their books up and get rid of it.
Yeah.
And they were listing it for like $900,000. We offered them $675 cash. They took it. So
they took it.
Yeah, they took it.
So from $900,000, so that's a lesson right there.
There and then.
Don't be shy on the offers.
Definitely not. So we were probably going to go up to around $750 and stop there. You know what I mean? It was one of those where we're like, we're going to just offer and going back to the smaller deals, we were throwing offers and getting rejected and coming back a month later and even offering less, and then we'll get it. What was that Deutsche Bank, and they'll just come back whenever they wanted to. We're like, all right, we'll come back again, but then we'll offer less, and we'll still get it. So it was one of those scenarios, and again, we're thankful for it, and they took it, and we ran with it, and then it started from there. It went to zoning, and
How was the zoning process for someone who doesn't know
yeah,
about the zoning process
yeah.
in the city of
You
Chicago?
really got to know what's coming up when you're talking development. You know what I mean? There's a lot of things. So the city always looks into what the residents have to say about the projects coming to their areas. So, with all respect to the aldermans, and they're doing their job, right? So they're looking on the business side, and then they're looking at, the residents, which any of us would do if we're aldermans, right? So, there's a density thing that there's, and that means cars, more parking, more people coming in front, in and out these buildings. Some people don't like that.
Right.
So it's understanding, because if I lived on that block, I wouldn't want so many people parking their cars. But again, there's ways around it where you can, and that's how we approached it. We're like, listen, it's going to be, first of all, it's going to be enclosed.
Mm-hmm.
But then they came back and said, oh no, people have 2 cars now. And, it went into that where there's
certain parking ratio restrictions that have to be satisfied.
Well, you have to have a parking for each unit. So that we had, but then, some of the residents were saying people have multiple cars, and, they're going off of, I don't know what statistics, but
yeah.
So all of that played, and it took us about 1.5 years to clear that up.
Wow.
With the residents. And these are the things that come up that you just don't.
So it's
see.
good. It's
Yeah.
good to anticipate those sort of
Definitely.
timelines, because that can either
Oh,
make
yeah.
or break you
Yeah,
really on
yeah.
a project. I mean, you're talking 1.5 years out.
Yeah.
You don't have any cash flow.
Right. Attorney fees.
There's
Yeah.
attorney fees. There's legal
Yeah.
fees,
Yeah.
and so
So all of that, happens in development. These are the things that we started with. Then, then it gets to the real problems, the bigger problems where, the plans and the architects, the structural engineers, and the mechanical
and the
engineers.
contractors going back and forth,
And going back and
saying
forth,
it's one
and-
price and then coming back at a different price. These
And-
assholes.
Right.
I'm
And
a contractor too by trade, but I know how it is.
Yeah, and you think you can trust some people, and then one day they're this, and then
Yeah.
another day they're that. Once they got your money, it's like you're locked, and then it's come and get me. See you in court. And it's like how litigation.
So it's not
goes.
so easy.
It's not
it
easy.
takes a
You
lot of planning and
definitely need to
preparation.
have. You got to have your team lined up. You need to know who you're working with. And if you're a GC, you need to know your
Your
subs.
numbers. Yeah, and your
Your
subs.
numbers, and most important thing I would say to development is the structural engineers.
Really?
Yeah, definitely. I mean, those guys are the ones that that's very important. To have the right structure. I mean, you see what happened in New Orleans, right?
Yeah, that was
The Hard
crazy.
Rock, and God forbid that happens to anywhere else, but that falls back to the engineers.
Absolutely.
Definitely. So so you really can't have anything without having a proper structure. So you got to make sure that your engineers, and those are the problems we had. They overbuilt our place. So not having experience, I didn't know how big of a footing I would need for a 4-story building. Come to find out, I needed half of what I have now. And that was about $200,000 worth of.
Okay, that's what I was just going to get to. I mean, what kind of savings are we talking about? Just something?
Just concrete.
Concrete alone.
Concrete and rebars.
$200,000 in savings.
Yeah. Just like that. Just
Wow.
because, he was a newbie.
Yeah.
And, I guess he wanted to protect himself a little bit too much. And that's where we had to eat it.
Yeah.
So we're eating shit on that part, but it is what it is. We kind of budgeted in, expenses. But quickly to already dig into that extra. Yeah.
I understand. Well, that project looks like it's going to be great.
It is.
And, what we're going to do is we're going to have a link actually with some of the pictures here on our YouTube channel.
Cool.
So if anyone wants to go ahead and visit and see some of the specs or is interested in the leasing, Goldbay Advisors, we're exclusively representing on the leasing side as well. So that we thank you for that as well. And Alex, we're going to go ahead and shift gears now. We're going to go back to you.
Yeah.
We want to talk a little bit more about on the brokering side. How have you been able to acquire some of the clients that you're currently with? You're working with some great funds, institutional clients, different developers. How have you been able to build your book of business? If you can shed some light on that too.
Sure. Well, Johnny, really boils down to persistency, consistency, and really representing yourself in your client's eyes and making them believe that you are the person who is really representing them and looking out for their best interest. Um, Once clients see that and you, as far as your character, as far as who you are, how you respond to emails, phone calls, texts, how quickly you respond to them is a great element of distinction between one broker versus another.
Definitely.
And I think that's a key. And it just has to do with who you are and how you provide value to your client. And I think once you provide that to one client or second client, word of mouth gets around, you get referrals, and you kind of grow your book of business from there. But it's really boiled down to putting clients' interest first, and really doing the best you can, whether it's to market their property or negotiate the best possible purchase price for them.
Absolutely. That's definitely, I think, the number one thing that stands out. Also, I think response time, you hit the nail on the head with that. How many times do we reach out to brokers and we never hear anything back? I mean, it's crazy.
Right.
So
Time is money.
yeah, time is money.
Yeah.
But you get a lot of brokers, especially in this industry and especially in the commercial business, where they have their own book of business as well. And as we've seen, there's not a lot of reciprocity or a lot of help between commercial brokers. It's kind of like a cutthroat world.
Sure.
And you want to tell some stories on that too, and what we're trying to do to change that?
I appreciate the question, Johnny. I'm not going to go into specific names
No, of course
and
not.
brokers and brokerages, but it is a very cutthroat business, where there is a lot of money involved, in whether it's transactional or not. There's always going to be that cutthroat mentality and aspect of the business. There's great commercial brokers, they're far in between and few of them. But there are very great people out there that you just have to build your network with,
Correct.
surround yourself with,
Yeah.
and know which brokers you can actually call and email and rely upon, and which brokers are there to take advantage of your particular situation. And those are the brokers and people you kind of want to stay far away from. But the overall industry does not have a good reputation with respect to cooperation, into transparency, into full cooperation, and that is a problem. And we at Goldbay believe in full cooperation and transparency, and I believe that's how we're able to distinct ourselves among the broker community, along with the fact that sellers and buyers see the full transparency that we have in cooperation in our transaction and brokerage.
Yeah, and going back to originally what you said about adding value, looking out in your client's best interest, I think that we do pride ourselves in going that extra mile. For example, if a client closes on a commercial property, we also offer, the leasing portion of it to help them get to add value to their buildings so that they can go ahead and at a later point in time sell. And you've worked on some great deals. I think that you have that I've seen personally, where you represented the buyer and then at a later point in time help them add enough value that they could sell at a later point in time.
Absolutely.
So do you want to talk about any of those sort of deals in particular?
Sure, absolutely.
Even with the developer, you did one. I know that you did some development too as well.
Yeah, absolutely. So, it's a business model. I'm not going to get into specifics of the business model of particular clients of mine, but it's the essential component of value-add properties, right? So it's just a matter of finding units that need to be rehabbed where you can increase the rents, and subsequent to that, you're increasing value to the building, you're increasing the net cash flow, the bottom line, and from that point, you're increasing the net sales price and the cap rate of the building, which you can sell it at a lower cap. But the bottom line is that we specialize in finding these opportunities and
Right.
deals for our clients over the past few years, and that's kind of the value that our clients see behind us and Goldbay into representing them. So
Because we
uh,
hit the field, and I mean, we're out there in the trenches looking day in, day out. It's not just looking and scouting CoStar, LoopNet, MLS. I mean, there's a lot of also you got to get down and dirty to actually find some of these great deals, and that takes time,
absolutely,
doesn't it?
Yeah.
absolutely, it takes again, going back to my original points, persistency and consistency into finding these opportunities and following up with those particular owners, because sometimes one phone call or one text or one letter to their house might not get the job done. And you have to thoroughly understand that component of it and have the patience to be persistent into your follow up.
And actually making the call,
Sure.
making the call. That's
Sure.
that's the
Definitely.
number
Yeah,
one.
yeah,
It
yeah.
starts. It all starts from there.
It starts from there.
It's
a
a
lot of
grind.
guys are
Definitely
getting
a
ready to
grind.
get ready.
Yeah. So it comes down
And
to
it
hard
take-
work and dedication for sure. So
Yeah.
those.
Absolutely. And so we got 1 minute left here before we got to take a break, but I want to go ahead and say, yeah, it takes a lot of persistence. You're not always going to get the deal. You got to be on the calls, but a lot of guys, when I was saying get ready to get ready, they do everything. They build a database. They do all the numbers, the financials. But when it comes time to finally making the call,
Yeah.
they kind of panic. You
Right,
got to do
right,
that. So
right.
that's another thing that hopefully a strategy that we can tell different brokers, or not just a strategy, but just do it, right? Like if you're going to get deals and you want to be successful in this business, you have to make the calls. So, well, ladies and gentlemen, we're going to go ahead and take a break real quick because we're hitting that mark. And want to thank everyone. Again, I just want to send a quick shout out to our sponsors, Element Studios. Again, EL3MENT Studios.com for all of your video needs. They are there to assist and help you guys. They're very professional in what they do. And we're going to go ahead and share the link here as well, too. All right, ladies and gentlemen, and we're back from our short break, and we are here again with Naser Ahmed, president of Yafa Construction and Development, and Alexander Stoyanov with Goldbay Advisors, managing partner and founder of the Goldbay Advisors, real estate commercial boutique firm. And again, want to take a second to thank our sponsors, Element Studio, EL3MENT Studios.com. They are a full-service media production company, so go ahead and check them out when you have an opportunity. All right, so let's see, where do we begin this time around? Alex, so when we left off, we were talking about brokering a little bit, and one of the things that I wanted to let the public know, tell us some of the horror stories that are out there, like how, in this business, we all get excited about putting a deal together, but it doesn't end there, does it?
No.
All right. So what are some of those? Give us the nitty gritty. Tell us all the details about what it takes to actually get a deal under contract to closed and all the hurdles in between.
Sure. We're talking residential or commercial?
Let's do commercial because that's what we are here to focus on.
Sure, absolutely. Well, first things first, it begins with submitting an LOI, negotiating a purchase price.
What is an LOI?
It's a letter of intent.
Okay.
It's the first kind of process of submitting your client's initial offer to present it to the seller in terms of what your client is willing to pay for it. You go into negotiation. Once you agree upon a price, you have either, a drafted contract by the seller's attorney or a uniform contract. You go on the contract. Your buyer gives earnest money, and you go under the inspection. It's your first kind of hurdle and bridge that you have to kind of cross. And it really boils down to inspecting the property thoroughly and making sure that there's no structural defects. and making sure that your client is really buying a solid property.
And sorry to cut you off, not just a solid property, but some of that, well, I guess you're going to go into detail during the attorney review period, but sometimes not everything that you see is what you get, meaning structurally or on the financials.
Sure.
So that, I guess we can go into that part. Sorry.
Absolutely. There's a lot of hidden aspects of every single transaction. You have sometimes sellers that are unwilling to disclose certain things, that are lying, for example, on their water bills or expenses, and not providing you with the intricate numbers with respect to the bottom line. And sometimes you have unknown situations during inspection. You know, you have a lot of things, foundational problems, things behind walls, in between floors of mold, in between joist levels, or whatever the case might be.
I'm hearing that, and it just keeps adding on thousands and thousands of dollars, real quick. Yeah.
Sure, absolutely. So, you know, it has a lot of hurdles, but, you know, inspection is the first hurdle.
Okay.
Then is the attorney review period, where kind of the attorneys between the buyer and the seller have to modify and agree upon all the modifications. And then from there, you go into your next hurdle of the potential mortgage contingency and making sure that your buyer is qualified and can get their loan successfully underwritten by a commercial lender. So those are all the hurdles that kind of go in between the timeline from submission and offer to the closing table. And a lot of times, a lot of brokers get excited, and a little too excited, and they start to count their commission dollars before they enter their bank accounts.
Yeah.
And, you know, that's sometimes, you know, it can backfire at you. You know, when you place a property on the contract and you think it's a closed deal, and, you know, you've seen the commission check, and that's the wrong approach, really. You have to stay focused on each independent transaction, focus on the sequential kind of steps of the transaction, make sure you're following up, you're doing everything on your behalf, that you're representing your client, and kind of following up amongst every process and every step, whether that's with inspectors, attorneys, loan officers, appraisers. It goes into the whole 9 yards of the whole follow-up game. And it's just very important to be diligent and on top of your game, and making sure that you're there amongst every step of the process. And don't count any of your commission checks before, and just kind of have the patience until the deal.
And what's
close.
the timeline? What's the timeline from deal under contract to closing? How does that look like?
It depends. If it's a cash transaction, it could be 30 days, 45 days. If it's a mortgage contingency transaction, it can be anywhere from 45 days to 90 days.
Okay.
It just depends on the size of the transaction.
Yeah, and that goes for the buyers as well. They go to their banker, and he says, "Oh, you guys are pre-approved. You know, you guys are going to get this deal," and it really doesn't come down to that gentleman you see on the desk, right? Or
right
in the office in your bank. It goes back down, you know,
to the underwriter,
to the underwriters, and there's a board in that bank somewhere, and they meet once a week or whatever the case is, and they're the ones that call the shots. So you as a buyer, you know, you have 30% down, you have 25% or 30% down, and you're thinking you're solid, you got good credit, and you know, your income, it really, there's a ratio to all this.
So are they looking, is the lender looking at your income? Are they looking at the property income?
Definitely.
Both, because it's typically both, right?
Yeah,
the borrower has to qualify, and so does the building.
Yeah.
And also, you know, has the debt service at least, I think, 1.3, right, coverage ratio.
Yeah.
So, you know, those are the sort of numbers that...
And that's the thing with the buyers. They don't realize that part until they're in contract, and then underwriters will come back, you know, a few weeks later and say, "Hey, you know what? The board said this, that." You know, and sorry, and you're, you know,
your earnest money just went hard, and you can't get it anymore.
Right? Oh, yeah. Oh,
and maybe an attorney forgot to file an extension on the attorney review period.
Hopefully, you don't sign a contract with hard money. You know, earnest money. And, yeah. But you know, that's something that the buyers need to be aware of too. Is that your banker is not the guy that calls the shots. it's the owners of the bank and the board. They're the ones that call.
That's great advice.
That's so. As a buyer, I highly recommend that you ask these questions to your banker before you even submit a contract. Hey, am I pre-approved or am I approved? Like, what's the chances of this really closing?
Right.
I need you to run these numbers really close. This is what the property is. This is the numbers that this property is giving out every month, and
And that also
all that
goes
has
to
to come into
relationships, right? I mean, it's as
yeah.
important to have. We were talking about earlier with Alex about the importance of relationships with
with the
brokers,
banks and the
but
bank,
also
yeah.
bankers.
Oh, big time with the banks. I mean,
Yeah.
in the beginning, with me, bankers would look at me and say, we don't know you. I mean, you look okay, but a lot of these bankers, especially these smaller banks, community banks, they really, really want a relationship. They want to know who they're giving out the money to. I mean, you might look good on paper, but a year or two later, that can change. You can go from showing hundreds of thousands of dollars, a year or whatever the case is, and 2 years later, you're filing for bankruptcy, and you're not making that income, and the bank, just gets, smashed, and that's what happens, and that's why banks really are they're taking out measures where they're protecting themselves. And that's when they're asking for collateral. They're making sure that your ratio, your income is.
But that relationship is that tipping point where it's like, okay, you've gone through a tougher situation this year, but
that's when they let you go with 20% or without
right,
collateral.
Exactly.
Or, that's when you build that relationship.
Exactly.
When now it's like I can go to my banker and be like, hey, this is what I have, and they'll be like, Naser, you've been with us for 5 years and we haven't seen a late payment yet.
Right.
You know what I mean? And that's very important to, they give you a 15-day grace period, right? On your mortgage and your monthly mortgage payment, I mean, that's great if you want to take advantage of that 15-day grace period. But again, you want to look badass,
right?
Put that shit on auto pay.
There it is.
And you pay that shit on time.
Exactly.
If you want to, that's the way I look at it. And, that makes you look good with the bank. Put everything on auto pay everything on time. Always keep your credit cards below whatever the ratio is. They always want it, what is it, 60% under or 70?
Less than 50% of the total account balance.
Yeah. So, all that matters. And, you got to look good. You really got to look good. You got to be.
And it's not just, it's not just something with the bankers. I think that's the principles of business in general and in life. You want to do unto others what you'd expect. The sort of level, if you put out money out there on the street, you want to try to get that back as quickly as possible.
Sure.
You want to get that money paid on time.
For sure.
And if that person pays and follows the rules of the loan agreement, and they come back to you, they're going to say,
Definitely. Going back to the beginning, working with hard money lenders, I my stories, and going back to some where they'll tell me, this is your monthly payment of $1,500, or $2,000, and I'll be like, listen, this is what I can afford. I'm giving you $5,000 a month.
Right.
Let's schedule it like this. This is, and then they'll be like, wow,
They love it.
They love it. So it really, I always tell everybody, make your bankers happy all the time. People come to me all the time, say, Naser, I got 30% down. I want to buy this property. I say, great, you got 30% down, but, do you have any reserves? Do you have,
Right.
What do you do? What do you make a month? Like, do you
What
understand?
happens is your boiler breaks down.
Yeah,
the
your
second
boiler,
week,
right.
yeah.
Imagine your freaking roof, or
Caves in,
and then there's,
For
a
the leaks.
lot of things hit you. After the closing, that, reality kicks in really quick. Your tenants, anything can happen. You can have a bad tenant and he can put you in, eviction court for a year. You need 10 grand right there. They can damage your place. You need another 10 grand after they leave.
Yeah, I mean, I've had, I think all of us have had to deal with some terrible eviction stories. I know
yeah,
I've
sure.
had to.
I had guys with a
6
750 credit score when they first came in, and they leave with, oh man.
Actually, I remember there was one property when I was still doing residential. You picked up those. I think you had 4 condos in one building.
Yeah.
Do you remember? And I think there was that one tenant, that horror tenant. Everything looked great on paper.
A teacher and a chef.
Yeah.
Unbelievable.
And
They came in with
Actually,
excellent
I
credit
think one
score.
was a sheriff.
Oh, then I had a sheriff too.
Yeah, a
I
sheriff
had
of
to.
all
Yeah,
people
yeah,
that
yeah,
would
yeah,
stop
yeah.
making their payments.
Right when I told that sheriff, I'm going to evict you, and I'm going to,
Yeah.
I don't know how this is going to work, but you're going to about to evict yourself, or somebody's going to evict you. Buddy. But I've seen it all, man. I've seen it all. I've seen people.
And how
where,
much money is lost?
yeah, I've lost. I would
not
say
just lost
probably
rent.
for some of. Oh, yeah. Oh, that's the easy part. You know what I mean?
Yeah.
Some of these people have these dogs that come out of nowhere. They start off with a Chihuahua, then they end up with a
That's
freaking
true.
Mastiff.
Yeah.
Eating away on your
Cabinets,
cabinetry, your
yeah.
floors.
Sure.
Scratching
So
away your doors.
people think it's just paint and drywall and patching and change a door. Sometimes you have to redo the floors, you have to redo your kitchens and your appliances as well.
And there's
so I
sometimes-
understand some landlords would say, "Hey, bring your own appliances," but I don't work like that. I put my own appliances in, and they'll ruin them. Really, really,
There's
it
no.
would-
It
there's
seems
no
like there's no
fixing 'em.
appreciation sometimes. It's almost far
my
and few.
God.
But I mean,
it's
look, even
unbelievable what some
and
people do.
that's obviously a lot does go with the application process. You want to make sure that you've
Right,
got good
right.
credit, good income.
But nothing's guaranteed. Nothing is
landlord
guaranteed.
verification,
Oh, yeah.
past rental history, that goes a long
Definitely.
way.
Very
I think
important.
credit scores are huge. Definitely a huge.
Huge. All of that. All that counts.
Yeah, that has a lot to do with the success of the tenant, and
For sure.
but even then, right?
Even then, I
So you
mean, my
have to have
stories are
reserves. Yeah.
excellent credit score, perfect couple, and I've, a lot of, most of my troubles come with, newlyweds or, couples that are, boyfriend, girlfriend, been dating for a couple of months or a year or so. Oh, let's get our own place. Then reality
seen
hits,
that too.
right? And then they get in a fight, and right when the financial problem, the landlord always gets it first. You know what I
Absolutely.
mean? It's not the credit cards, it's not the car payments, it's landlords, then the car note, probably. You know what I mean? So we see it all, and we always get when it goes from their personal life, then it goes into your business life really quick. So I don't want I highly recommend for everybody that's wanting to get into real estate and becoming a landlord or a developer, or just make sure you have a cushion. It's not about your 30% or your you have to have a cushion. You have to be prepared mentally, physically sometimes, where you have to do some lifting and do
I've
some.
seen you at the Home Depot a few times.
Oh,
We've run
yeah.
into each other. I know my
visit
business partner at
definitely,
AUM.
definitely.
You've
I'm
run into
hands-on.
him as
I'm
well.
hands-on. Definitely. You have to be there. I mean, yesterday, 8:00 at night, I'm fixing doors, and somebody locked themselves out and broke the doorknob, and I had to go replace it. Things happen like that. There's not a 24-hour on call. There is, but they'll charge you arm and a leg, and you can just run over there. So you do want to get get your hands dirty a little bit. It saves you a lot of money. I save probably at least 10 grand a year just doing these little small things that I can do with my tools and my work van. So,
And also, there's a lot of tips and there's techniques that you learn along the way on how to save money. Even at Home Depot, the bid room, for example.
Oh, yeah.
If no one is aware of the bid room, you can go and when you become a Home Depot pro, you can actually have all of your material bidded.
Yep.
Alex, I know that you have some experience there too, and some of the cost savings that you can find along the way. So if you can share some of those, we'd really appreciate that as well.
Sure, Johnny. I mean, look, I've developed a few properties. I've constructed a couple of single-family homes ground up. I've done a couple of rehab projects. So I know the ins and outs very well. Again, it boils down to experience. It really boils down to experience and having long enough duration within the business of having the relationship with the right contractors, shopping around for the material vendors, and understanding, hey, I need to buy drywall. Where's the most cost-effective place for me to buy drywall?
right. It doesn't have to be the big box,
Of course.
not always.
But usually it's Home Depot that has the lowest prices because,
They don't make money on drywall.
they don't.
Yeah,
But they want you to go into the store so you spend more money on other products.
right. Yeah.
But, the bottom line is after you have done 5, 10 projects, then you have a thorough understanding of, okay, where do I get my specific material from? Is it here? Is it there? Is it the next material? Where do you get it from? So every single aspect of the construction, of the rehabbing, over the years, I've compiled of sourcing and shopping around and finding the best vendors and the best prices. And that just doesn't come overnight. I mean, it takes time, and you really have to build those trust relationships when it comes down to your vendors and your building material suppliers.
That's
And then there's all the the lien waivers and things of that sort that
that's a pain.
comes with construction too. You know what I mean? You finish a project.
Explain what a lien waiver is, and
that pretty much protects you after the project is completed. I mean, that contractor or whoever it is you're bringing to do the work. You
can have a plumbing job.
Then he'll come back, and it might not even be him, but it can be the plumbing house that he bought the material from.
Right.
And they're going to come back to the property owner and say, hey, we're putting a lien on your property because so and so didn't pay us.
Do you do lien waivers?
Definitely. I push everything
on finance
through title.
Properties, or do you do it with or without getting a bank loan? Because
so my project right now, we're going in cash.
Okay.
Right? So I pretty much go through Chicago Title. You want to get
still
paid?
Get the lien waiver. Beautiful.
First,
that's the way to do it.
And there's you got to get down and really let the subcontractors know that either you're on this level or you're not. And
exactly.
when I mean on this level,
because there's
it's
lot
like
of guys,
you front the money.
Yeah.
I don't want to pay you $1 until the job is at least started, halfway done. You get
it's a receipt. Also,
right.
you can do the partial payment, partial lien waivers. But that's what we do on our projects. We get the partial until it's complete.
Sure.
Sure, and you got to get them because otherwise, once they're paid, they're not coming
back.
Let them
start with their own money.
Sometimes.
That's the right contractor is when he has the ability to start with his own money. Some of these contractors will be like, yeah, great. Okay, you settle at $50,000, $20,000, whatever the case is. I'll give me 50% down. If that guy comes into one bad situation, it's coming to you. Like it gets really, really ugly. And these are the horror stories that come with real estate and development and construction.
Sure.
You just get screwed left and right.
As much as you want to trust sometimes some of the contractors, you cannot.
You can trust him. He's probably a really great guy.
Sure.
But, his personal life, something happens we all know what life, things that happen every day.
Yeah.
Your life can change in a second.
Mm-hmm.
So sometimes it's not their fault. It's just a situation that they're in. And then that comes back to their customers and to their partners or whoever.
Yeah.
So I always tell everybody, if you want to deal with the real deal people, they have to start with their own money. So, and that's the way, in the beginning, it was all, okay, here's 25%, here's 50%, starting in the business, we trusted everybody here, there. But then when you get to the larger scale, then you get screwed enough times where you're like, excuse my language, fuck that.
Yeah.
It's not happening anymore.
Absolutely.
You know what I mean? You're either going to do what I'm telling you.
Absolutely.
Or I don't want your business. Plain and simple, right? So that's a recommendation I tell a lot of guys, deal with the guys that got money. That's on your level. If not, these guys are going to burn you. There's a good chance they're going to burn you, and then go fight, go chase them down. You know what I mean?
Mm-hmm.
Yeah.
You're not going to get your money back, especially if you're on a level where you're busy, you got things to do, and you're not going to go check, follow up on 20K or 50K or whatever, just be like, fuck it, it is what it is. So
yeah,
you're going to eat it really quick. So
no,
it happens, man.
And
it gets, we're talking, real life, and that's when you know that it's not that sweet.
Real estate developments, they're all placed on a pedestal. You drive by, you see these beautiful buildings that have been, constructed and they look beautiful, but the amount of headaches, the amount of pain that it went to erect these structures, I mean, it's unbelievable.
Yeah.
And that's why I like you sharing all of that information, because people think, that it's a cake. Well, not necessarily. A lot of them, I think a lot of people actually know that it's not really a cakewalk, but
they always look at the money part, like,
exactly.
But they don't understand the actual work.
Right.
It's not about just the money that goes into these projects. It's about the guys behind it and putting that, making sure this project flows really good, because you got to remember, you're talking union. If you're not a union.
You get the rat,
right? You get a bunch of those guys coming at you if you're not going union. Then you got OSHA if you're not doing your safety. You got city inspectors that come from the woodwork. And listen, things come out of a lot of things just pop up. You know what I mean? And you really have to understand that a developer it's not just money that he's dealing with, but he has to have a schedule. He has to have everything, as they say. You have your ducks lined up.
Yeah, your T's crossed, your I's dotted, and everything in between.
Yeah. That's very, very important. You have to have a good schedule, or shit will fall apart really quick.
So long term, once you finish this development, where do you see the company going? What sort of vision do you guys have in mind? Tell us a little bit about that.
We're hoping and planning for just development. No more of those. If we're for cash flow, we are going to be looking for larger buildings.
Apartment
buildings, 20, 30, 50 units and above. So we're going to be focusing on development. But then again, like you said earlier, I do other businesses. So we're looking into car washes.
Mm-hmm.
We're looking into gas stations. We're looking into plazas. Some international things probably in the future, but one step at a time. I'm just getting into the bigger scale and development. So, but
now I know you went to China too.
3 times.
3 times, okay. And have you seen any sort of value in bringing?
Definitely. There is value, a lot of value. Just there is a lot of there's a lot of requirements, and you got to know what's going on with. Again, we all see it, all the geopolitical things that are going on right now with tariffs and stuff like that.
Mm-hmm.
But a quick example of China, I went one time for, I was doing plastic bags. I wanted to buy plastic bags. I told you this, right?
I remember that story, yeah.
So I go there, we're ready to make the deal. I'm writing about $100,000 check, I'm ready to transfer money, wire money, all the whole, everything to get the money over there in China. And then the guy that was going to put the deal together for me, a broker that kind of gets the stuff on the ships and inspects everything and makes sure, all that stuff. There's people for that, and he was like, there's a 80% anti-dumping tax for these plastic bags. You know what I mean?
Oh,
I was like, hold on, 80%? What? I thought he said 8%. He said 80%.
Wow.
I mean, it was right there and then. I lost little money that I put down right away. Next flight. Let's go back to Chicago.
The importance of the due diligence, and nothing is as easy as it
nothing
seems
is
to.
easy.
Yeah.
But then going back, I went back to China for things that I thought I can, and there is a lot of value in China, but again, there is a lot of homegrown USA products that we still can work with, and that's my goal, is to kind of buy and purchase things that are manufactured in the USA. That would be my priority.
Absolutely.
Actually, and because we need that growth, we need all of that. If we can keep all our money in the U.S., that's great. But again, sometimes, larger scale, you might want to buy things in bulk, and you got to go to China. But things are still changing. Things are coming back, and there's a future for manufacturing definitely back in the States. So we're waiting on that, and
perfect.
Hopefully they can.
Well, that's great. I mean, it sounds like it's a very promising future for you, for the company, and I'm glad to also see it continue to achieve all the success that it has up until now. I mean, trust me, whenever I see that, I'm inspired, I'm proud, and it's just, I think everyone else is. Everyone has seen, all of those Sauganash kids that saw you,
Right in our
where
bikes
you're at now,
cops and robbers,
cops and robbers around school.
Yeah.
We're seeing what you're doing now, and we're all proud for you, and we're all rooting you on.
Yeah, likewise, man. Definitely love what you're doing.
Yeah. And Alex, tell us where do you see our company, Goldbay Advisors, where down in the future. Tell us a little bit more about the growth, and as the CEO of the company, tell us more about where you see the business headed, where you see the commercial, there's been talks of recession, how that falls into the business model. A lot of people are worried. How does that affect our business and other businesses in general in the commercial space?
Sure. Thanks for your question, Johnny. It's really about evaluating where we are within the business cycle, interest rate cycle, and having a finance background. It really helps of breaking that down, dissecting it, and being able to kind of uh, explain that to your clients of where we are within the stage cycle, where are we going, where's your asset in terms of uh, financing? Are you due for refinance? Are you due for selling the asset because you have depleted your depreciation? It's just a matter of evaluating everything on case by case basis with your clients and finding the best solution for them. With respect to the current marketplace, we have seen a lot of developments throughout Chicago. You go downtown, you go through all of the kind of hot neighborhoods, you see a lot of cranes, you see a lot of current construction going on. There is a lot of job growth within Chicago. So we've seen a lot of companies kind of relocate here and add some more jobs, which has a great impact on the demographics and the demand for real estate and housing within Chicago. Again, it really boils down to where's your property located. It really boils down to dissecting everything on case by case scenario. As far as the overall growth and the plan for Goldbay Advisors, I'm glad to have you as the managing partner of Goldbay Advisors. I enjoy working with you, and I look forward to our growth together in Goldbay. We are focused, as you know, on multifamily deals and larger scale transactions, and we'll continue to do that in 2020 and beyond. We'll also look to potentially add some brokers to our team who will be able to expand upon our knowledge and our databases of current investors that we have to service them better. But I think it's more important of, again, focusing on each client's specific needs and at the particular time, whether they're looking to buy or sell or refinance. And again, you have to really put all of your interest in the back burner and look at the client's best interest and advise them upon their best interest. That might not be the case for your interest, whether that's taking the listing. But I think if you advise your client upon the base case scenario, the client will appreciate that and see the long-term perspective value that you will add to them in their business.
Well, gentlemen, thank you so much again for joining us on the second episode of the John Gill podcast show. It's been a pleasure. I think we've had a great time. This has been awesome. It's been a lot of fun, and can't wait to have you guys back on the show. So with that, I want to just say again, thank you to both.
Thanks,
not
Johnny.
just for being on the show, but for being great friends and for us to continuing to grow in this business, and hopefully just seeing where the future takes all of us and and everyone who's also listening as well.
Thank you for having us.
We look forward to that. And again, right before we sign off, I just want to say again, thank you to our sponsor, Element Studios. That's EL3MENT Studios.com. They're a full-service media production company based here in Chicago, but they can go ahead and service all of the Chicago and surrounding suburbs as well. So go ahead and check them out. They're awesome. And all right, guys, thank you so much.
Awesome.
Appreciate
Congrats.
it.
Thanks,
you.
Johnny.
All right, awesome. Thank you.